Okay, so today what I want to talk about is, well, first of all, I know I've been a little bit absent from the typical live Facebooks or Facebook Lives, I should say. And the reason for that is I've been doing more interviews as of late. And so I'm still producing, obviously, the podcast, but I thought, you know what, I got to get back to doing the Facebook Lives because I really enjoy it. And I don't want to kind of lose that rhythm, if you will. So I got a question from a gentleman, Tim, yesterday actually, and a good friend, client of mine, and he was asking about Shane. I've started to talk to commercial brokers, and how do like what do I say to them? What kind of deals should I ask them to send me? And I thought it was a good question because I think that once you so I'm going to back up. I think what needs to happen is, first of all, you've got to get very clear on what it is that you're trying to accomplish. Because without that kind of clarity, if you will, then the challenge is you're talking to brokers and they're going to find out very quickly that you really don't know what you want. And so they'll either send you crappy deals or they won't send you anything. And so the concept I want to talk about today is what I call a programmatic buyer. And this is a concept I learned from a gentleman, Derek Lobo. So he's a very successful multifamily broker in Ontario. And heard him say that concept, and so I can't take credit for it, but I really like it. So the idea behind a programmatic buyer is that you have like extreme clarity. And so I'm going to walk you through what I do with my one-on-one clients. I'm going to do it in a very condensed format because I do this, and this is almost a half kind of class, if you will. But first, there's a couple of things, right? So once you've established your investing criteria, you know what you want, you know why you're investing, and you know how you're going to do it. So those are the three things that we're going to go through. And in the 9 steps, step one is, what are you going to purchase? Are you going after industrial, retail, multifamily, office, mobile homes? So that's kind of question number one. Question number two is, how big, right? How much equity do you have? How much debt are you going to require? We're going to get into leverage in a little bit. Step three is, what are the cash on cash returns that you require? See, when I invest, I know that I'm looking for like a 12% cash on cash return. And the reason for that is because if I'm paying my investors a 6% return, or 8% or whatever it happens to be on depending on the deal and the risk, then for me to exist in the deal, I need to have a high enough value, or I need to get enough cash on cash return to justify the time I'm going to put into the deal. If I'm only getting an 8% return and I've got to pay 8% to my investors, then I'm really waiting until the very back end of the deal to make any kind of money. And so as a syndicator, that doesn't work. Now, if you're investing on your own, you're going to have different um, uh, investment criteria, right? And so I'm just telling you from my perspective, because I think sometimes what happens is um, it's easier to hear how someone else has done it so that you can then take it for yourself. But understand, as a syndicator, this is really this is my philosophy and how I'm looking at investing. If you are let's say you've got $5 million and you're just basically trying to maintain the wealth that you've got, then you may be looking at 6% yields in core areas, right? And this I think, so I was on step three. This is step four, which is, where are you going to invest? Are you investing in your backyard? Do you have relationships in the area? How big is the market? What like, are you going to see deals before someone else, right? And so you can kind of look at kind of three different markets, if you will. There's primary markets like New York, LA, Toronto, Vancouver. You have secondary markets. I would argue that, say, Calgary or Austin would be a secondary market. And then you've got tertiary markets, which are much smaller. And they would be kind of like a Red Deer or Tucson or something to that effect. So where is going to impact number five, which is, who's going to manage your property? I experienced this when I was out in Muskoka. Very difficult when you're in those kind of smaller resort communities to find really good property managers. And so that's kind of question number one. The next question is, how big is your deal? Can you even afford to hire a professional property manager? So these are just all the things that you really need to kind of run through. And like I said, I'm just going through it fast, and you can kind of re-listen to this and go through again. And I'll recap it in a second here, but I just want to get through them first, and then we'll talk a little bit more about what I would actually say to a broker. Step 6 is who's going to do the lease up, right? Especially whether it's multifamily, commercial being office, industrial, or retail. The questions I would be asking, I'm talking to the leasing agents now, not the person that is on the investment sales side, right? So if you understand commercial real estate, you know that generally you've got people that focus on investment sales, and you've got people that focus on retail or leasing, if you will. And those can be the same person, but not always, right? Especially when you get into very specialized big brokerages, they typically are very specialized. So if a person's bringing me the deal, I'm going out and saying, okay, that's great. Now I'm going to go talk to the leasing agents and find out, number one, how long is this going to take to lease up if it goes vacant? What's it going to cost me, both in leasing fees and in TIs or tenant improvements, right? How much am I going to have to spend in the space to bring it back to a place that I can lease it out? And if it's vacant, how much am I going to get for rent? I mean, the markets are always changing. So it maybe, like, I'm looking at a deal right now where the rents are in that kind of $14 to $15 range. If that tenant went dark, meaning it left, I'm probably closer to $10 or $12 a square foot, right? And so I need to kind of factor that in. And what is the risk of that tenant leaving? Step 7 is there any deferred CapEx or capital expenditures? Big ones that I would be looking at are roofs, mechanical systems, exterior structure, parking lot, because over the next 5 to 10 years, if you're holding that property, you're going to have to factor that in. And generally, CapEx, money that you're investing into the actual structure of the building, it's not really going to add a lot of value to it. However, it's necessary to maintain it and obviously keep your tenants happy. Step 8 is how much leverage can you obtain? So right now in Calgary, for example, it's very difficult to get debt on office buildings because there's 28 or whatever, let's say 30% vacant almost. On the flip side, multifamily, typically very easy to finance. So you need to understand what are the bank's appetites, and as the markets move up and down, you're going to have the availability of debt fluctuates, right? And so that's very important to kind of just be like, you want to have your finger on the pulse in terms of how much debt can you actually get, because that's going to influence your cash on cash returns, how much equity you're going to require, all those kind of things. It's just, you can see how these 9 questions, they all kind of, they're not separate. They're all kind of integrated. And the last one is step number 9, which is what is the legal entity that you're going to purchase this in? Typically, the deals that I do are in limited partner, general partnership agreements. And I do that for legal purposes and tax purposes. But I'm neither a lawyer or an accountant, so I'm not going to tell you what you should do. Different markets require and different types of properties, and if you're bringing in outside investors, all those kind of things are going to influence how you structure your deal, right? So I'm just going to run through them one more time really quick. And then what I thought I would do is just maybe tell you or share with you an example of what I would maybe say to a commercial broker, if you will, if I was having a meeting with them. I'm going to do it a little bit freestyle, but anyways, we'll see how it goes. So the 9 steps one more time. So what are you going to purchase, right? What is the asset class? Step 2 is how big, how much money are you going to require? How much seed capital are you going to need? Step 3, what are your cash on cash return expectations? Where are you investing? Step 4, who's going to manage? Number 5, 6, who's going to do the lease up? 7, any CapEx that you're going to have to take into account. Step 8, how much leverage can you get? And step 9, which is the legal entity that you're going to purchase. Okay, so those are the 9 steps. Now, in practicality, how would I actually take all that information and then communicate it to a broker? So I'm going to use an industrial property as an example. And what I would do is I would say something like, so I'll use a friend of mine, Richie, who sends me deals every once in a while. I'll say, so he'll say, Rich, he'll say, Shane, like, what is it that you're looking for? Like, you're an investor, but how can I make sure that I send you the right deals? And I'd say, well, look, man, number one, I'm looking for deals between 5 and 15 million, right? I'm looking for deals that are too small for the institutions and too big for the mom and pop. So I'm kind of explaining to him why I'm looking at a deal of that size. I like Calgary and Edmonton because I've got relationships and I can obviously drive to, I could basically drive to them. If it's industrial, I'm looking for minimum 20-foot clear. I'd like 24-foot clear. If you don't understand what these terminology and the words are, don't get hung up on that. That's not as important. Obviously, if you're an industrial investor, you're going to want to understand what that means. However, just for these purposes, I'm just going to kind of rattle through this. I'm looking for either dock or drive-in. I'm looking for smaller bay, kind of 3,000 to 5,000 square foot. I want multi-tenant industrial, minimum 2 per thousand, maybe 3 per thousand. That's how many parking stalls there's going to be per thousand square feet. I want vacancy. I'm looking for a problem on a property because for me, when I go to my investors, I need to justify my existence in a deal. And if it's just a coupon clipper, so coupon clipper meaning like a bond, they don't get very excited about it and they don't need me to essentially, like, it's hard for me to justify why I should be earning a fee to do this deal. I need to solve a problem. I want possibly excess land, or I want tenants that are rolling, meaning leases that are coming up and I can pop them, meaning I can push the rents. Um, and what I'll typically say is like, look, I'm looking for a property that has a story. I want to add value in some capacity. I'm okay to fix problems. I'm okay to fix vacancy. And even if it takes me kind of 24 months to solve a problem, that's okay. I just need a reason for me to exist in the deal. And that's really how I pitch it. So as you can see, clarity is like so key, right? Because if I know that I'm talking to a guy that is going to bring me industrial deals or retail deals or multifamily deals, those are the three areas that I can play in. And I've done all of them, so I'm able to speak intelligently. I would suggest if you're just starting investing in commercial real estate, you're going to want to master one, right? Pick one that you really want to get after, and then understand the terminology, right? If you don't understand what a dock level door is, or 24-foot clear, or turning radius is, or access, and all that kind of stuff, you're going to want to really research that so that when you are having conversations and you drop some of those kind of terms, what's going to happen is the broker is going to know that you're real and serious. Okay. So terminology is key, and clarity. Having a deep understanding. So this comes into research now. And look, at the end of the day, all this takes time. I get it. But the time is going to be well spent because as you increase your knowledge of, what is the price per square foot for an industrial building, in this area, right? Is it 100 to 125? Are rents, $8 to $12 a square foot? Are they triple net? Is there job growth? Is there new infrastructure? Is there new development? I mean, all these things are going to factor in, and you're going to have done that by going through um, like what I just described, which is the programmatic buyer. That's like one specific step of kind of the bigger picture, if you will, of developing your investment criteria, right? So that's like there's like 7 steps in that process. Excuse me. The programmatic buyer is like step 1 of 7 steps, right? And that's why I said I can only this podcast would be like a masterclass if I went through the whole thing. But I think that it's narrow enough that you can really drill down and use this and basically get out there. So, like I said, it's going to take some research, but what I would suggest is get the brokers to start sending you deals and start doing what I call the BOEs or BONs, back of the envelope, back of the napkin, and just start underwriting the deals. See what kind of net operating income or NOI is getting generated. Look at what the risk is. What's the upside? Can you take or de-risk the deal so that you can kind of push the NOI without having too much downside? I'm always looking for that. A few other kind of intangibles, if you will. Number one, can you see the deals early? That is really, really important. If a deal's been shopped to everybody and no one likes it, I want to know why. So I love to see deals first and early. And number two is I'll talk to the broker and say, hey, like, what do you like about this deal? Like, do you want to come into it? Sometimes they'll say yes, sometimes they'll say no. But at the end of the day, you're kind of testing them. Like, uh, sometimes they can't come into a deal because they're conflicted. Obviously, I mean, if they're representing the seller and then they come in and they're coming into your deal, that's a different story. But if they're representing you and there's another broker involved, which sometimes happens, then yeah, I test brokers all the time and say, hey, do you want to come into the deal? I'll give you a carried interest, meaning I'll give you a small piece of the pie. Because what I want to do is sometimes, especially if I'm in a market that I don't fully understand, and I'm looking for that external or that outside expertise, then what I want is I want to understand, like, here's a person that's in the market, and if this is such a wonderful, amazing opportunity, why don't you want a piece of it, right? And so I'm testing guys all the time, and I think that that's kind of just something that you can kind of put in your back pocket and think about. You don't need to do it. I just sharing how I do, how I invest, and like I said, the way I invest isn't the right way. It's just what's worked for me. So, yeah, I think that that's really uh, what I wanted to cover today. Now, typically, what happens after they say, "Well, Shane, I'm starting to find deals. How do I raise the money?" I've got other podcasts and videos that I've done on that. What I would suggest is, if you don't have a copy, grab a free PDF copy. This week, I've put it out there at Club Syndication, excuse me, clubsyndication.com. And you can just enter your contact information, and I'll send you a free copy of the book. Yeah, so that's it for now. If you have any questions, like I said, I mean, this podcast was as a result of a friend of mine who asked me a very specific question. If you have questions or you have comments or you really enjoy the show, I'd appreciate kind of a 5-star review if you're listening to it on like iTunes or Stitcher, and if you're watching this on YouTube, then just leave a comment below, and happy to kind of interact and make sure that I'm answering questions as they come up, because I know as you kind of progress down the path of investing in commercial real estate, kind of every step that you take, you're going to start to see new problems and questions. And I just want to make sure that I can help as much as possible. So that's it for today. Hope you enjoyed the show, and I'll be back next week. Bye for now.